Hello, everyone, and welcome to the show today. Today, we're going to be diving into business credit. We're going to be talking about the exact steps, the exact formula of how you can establish business credit. This is credit that's linked to your business EIN number and not credit you're personally liable for, not linked to your personal social. Now, we have a great free guide that you could grab and follow along with us. And it gives you even more detail than we'll be diving into today. And that's at creditsuite.com/EIN. That's creditsuite.com/EIN. For those of you that don't know me, my name is Ty Crandall. I'm actually the CEO here at Credit Suite. And what we do at Credit Suite is we help companies build business credit. So today we've helped over 15,000 companies build business credit. So I know a lot about the process. And what I'm about to teach you is the most up-to-date information that is available on exactly how this process works. If you have any questions along the way, feel free to reach out to us. Our email is info@creditsuite.com. That's info@creditsuite.com. And our phone number is 877-600-2487. That's 877-600-2487. Okay, so let's dive in. Let's start a little bit with the basics. Whenever I talk about business credit, I always like to at least start with what business credit is. So if you don't know, which 90% of entrepreneurs don't know anything about this topic, you can at least get some background of what business credit is and how it works. So we're talking about credit here that's built under a business's EIN number. It's not associated with your personal Social Security number when you do it the right way, which we'll talk about today. So this is the only legal way you can have two credit profiles. You have one for your business, you have one for you as a consumer. Whether you know it or not, your business has a credit profile. And once the bureaus like Equifax and Experian, even though you exist, they populate reports and scores for that business EIN. So this is commercial credit. It's business credit. It's linked to the EIN. It's separate from your personal credit report that's linked to your personal Social Security number. So business credit and personal credit are two completely different things. There's two sides to credit. There's consumer and there's commercial. And what we're talking about today is the commercial side of things. And the profiles, the scoring, all these things are dramatically different between the two. So with business credit, this is credit, again, that's in the business's name. And so it's based on the business's ability to pay, not you as the actual business owner. So since the business is qualifying for the credit, then when you're doing this the right way, you can get it with no personal credit check. You don't need to attach personal guarantees and personal liability. Ultimately, what's happening here is that business credit gives you a way for the business to fund itself, right? It gives you a way for the business to get its own funds and stand on its own two legs, get qualified based on its own merits, without you as a business owner needing to be able to sign and qualify for the business to obtain that credit. Plus, the business owner, again, you are not personally liable for what's going on. So you're not personally liable because you're not attaching a personal guarantee when you're doing this process, again, the right way. So businesses have, went backwards there. Businesses have a much greater need for credit than a consumer does. We call this capacity. So whenever we talk about credit, one of the core components of credit in the financing world is capacity. Basically, how much of a need do you have for credit, right? Well, businesses obviously have a much greater need for capacity than a consumer does. This is why the limits are so much higher on business credit cards than consumer, right? Because you may never need to spend 10 grand at Dell on home computers, but you easily could need to spend that or more on computers for the workplace. So this is also why the approval limits are so much higher than what you're going to find on the consumer credit reports. As a matter of fact, according to SBA, the limits on business credit cards are about 10 to 100 times higher than what you're going to find with consumer credit. What does this mean? It means in my world, in the business credit world, you're getting to $10,000 or $20,000 limit credit cards in about 60 days, right? That's impossible to accomplish in the consumer world. It takes you 6 months when you start getting credit as a consumer to even get a credit score from FICO. In our world, in the business world, in 6 months, you're already getting $30,000 to $50,000 limit accounts. Now, what determines how high those limits are is what kind of credit are you using? You know, if you're getting credit, you're only spending $100 on every credit card you get, nobody's going to give you a $20,000 limit credit card because you're not using the credit you're being given. But if you're being given credit, you're using thousands of dollars paying it back, then what happens is the next approvals you get are higher and higher. So the limits continue to get higher and higher. And this is why it's very possible to get to these $20,000, $30,000, $40,000, $50,000 limits. Again, within 6 months or less. So when done correctly, business credit can be built without a personal credit check and without putting your social security number on the application in some way. So this has changed now. In 2016, the federal government rolled out a regulation to prevent money laundering, and it just took effect May of 2018. And what the regulation says is it says that banks must know who's submitting the application. So basically, banks that are taking applications from business owners must get the date of birth and social security number from the business owner. So it's not uncommon now for major banks to we're starting to see this transition. A lot of them are still behind with the implementation of this regulation, but we're starting to see more and more of them ask for the social security number and the date of birth just as identifying factors to the business owner. But we still see a lot of stores, a lot of retailers that aren't that don't have that confined requirement because they're not banks, not doing so or not needing to do so. So you will in 2018 start to see more credit issuers force the fact because it now is federal law to get the social security number and to get the date of birth. But again, you want to make sure that you let them know that you are not giving the authority to provide a personal guarantee. You're not giving the authority to provide a personal credit check or to do a personal credit pull. Remember, in the United States, a law called the Fair Credit Reporting Act regulates and says that somebody must have your permission to pull your consumer credit. So if you don't give somebody your permission, by law, they cannot report it. And in some states, that's $1,000 plus violation every single time they attempt to do so. So again, a lot of applications you could still get away without putting your social security number on there. If you're now starting to hear that it is required, you want to make sure that you provide the date of birth and social security number so they can fill out the appropriate form to go to the federal government. But at the same time, you also want to make sure that you're not giving the authority for the personal credit pull or the guarantee. So with business credit, when you're doing this, there are no inquiries on the personal credit report. And business credit can quickly be obtained then regardless of personal credit quality. Look, if you're not providing your social security number, if they're not doing a personal credit pull, then they can't deny you because of personal credit quality. So that's how it's possible to get business credit regardless of personal credit because they're not even looking at your personal credit report. Now, the other benefit is because there's none of these inquiries, because they're not putting inquiries on your consumer credit report, well, then that won't adversely affect your consumer credit scores, your credit profile, and it won't hurt your ability to get other kind of financing, where having inquiries on there can do those things. And there's also no personal credit reporting of these business accounts. Why that's a big deal? Because 30% of your consumer FICO score is made up of what's called utilization. So if you start trying to fund a business using personal credit cards, which by the way is one of the biggest mistakes I see business owners make, then what happens is you quickly max out those credit cards, your credit scores tank, and your ability to get out of that situation becomes extremely difficult to do. This is the exact course that we see so many people make mistakes with as business owners. They come in, they use personal credit cards to fund the business because they're available. They quickly realize the business needs more cash, needs more money than they'd anticipated. They start maxing out credit cards. Credit scores are low. Then they come looking for help. The problem is the people that will give you money as startups, and you can get 50, 100, 150,000 as a startup, they're looking at these factors like inquiries and utilization. So if you've damaged your credit by using it to get personal credit cards to fund your business and putting inquiries on there or maxing out your utilization, you ruin your ability to actually get the money you could have got if you would have done it the right way. So as a business owner, utilization and inquiries are extremely important to you because when it comes to getting business loans and terms loans and SBA loans and lines of credit, those are two factors a lot of banks look at. So business credit helps you build and get these high limit accounts, not affecting inquiries, not affecting utilization, which still leaves your consumer credit intact to be able to use for other things that you will inevitably need to use it for your business and for you personally as well. Okay, so why do you want business credit? Well, a lot of different reasons. All major businesses have business credit. Okay, there's no major publicly owned or privately owned company in this country that has succeeded, that is still here, that does not have business credit. They all have business credit. Okay, Oprah Winfrey, Bill Gates, they don't put their assets on the line when their companies borrow money, right? We know this. We know Michael Dell and these guys, they're not personally guaranteeing what's going on in their business. So, but what the disconnect is, a lot of business owners don't know that that same thing that's possible for the big boys is possible for them, following the same steps, and it definitely is. So again, these kind of companies are not providing personal guarantees. They're not providing personal credit checks. Why? because their business has business credit. And this is, again, one of these, I think, misconceptions about business credit. People think that Michael Dell doesn't need to sign as a guarantor for Dell because Dell is Dell, right? You're like, well, Dell, of course, they're huge. But that's not the case. What's happening is if you look at Dell's credit report, you'll see hundreds of trade lines, hundreds of accounts they've paid as agreed that are showing on their credit report. Those hundreds of accounts, those credit reports, that's what lenders and credit issuers are looking at. So when they pull Dell's credit report and they see 200 accounts reporting and they see $100,000, $1 million, $10 million limit accounts that they've paid as agreed, that established credit is what gets them more credit, not the fact that they're Dell. But small guys can do this too. Startups can do the same thing. When you build a business credit profile and score, then you're building something that lenders and credit issuers then look at, and then they determine that you don't need to sign as a guarantor because, again, your business can stand on its own. Okay, so another reason to establish business credit is that, again, you really want to get credit history established before you need it. Okay, look, it's one of the major metrics that credit reporting agencies use when calculating business credit score, your history. Okay, and the longer and better a credit history you have, well, the better your credit score is going to be. So you want to have a longer credit score. Okay. So for example, Experian, 5 to 10% of their score has to do with the age of the business, the age of the credit profile. So the longer and better credit history you have, the better your score is then going to be. So you want to start as early as you can. You'll have to keep in mind what we're going to talk about today is a process. You don't ever want to wait till you need money to start a process because, again, this could take you 3, 4, 5, 6 months to get to where you may want to be. And you don't want to wait till you need money to get there. You want to start it as soon as possible. I get this question on a lot of radio interviews. When should I start building business credit? The answer is the minute you open your doors. Business credit's designed for the business to fund itself. You might as well as use business credit to let the business fund itself instead of trying to fund it personally, for one. And for two, by building business credit early on, you open up the doors to start getting financing like loans and credit lines much sooner than you normally would. Okay, so you also want to make sure that you have business credit for lean times. Look, if you're in a seasonal business, that's part of it, right? Sales go up and down. So having money during those down times is important. Okay. But every business can have slow times. Every business can have a negative review that cuts back sales for a while, a marketing campaign that fails, a month that's just off and not in line with their other months. So if you have to cover expenses, you're going to want to have revolving credit to get by. Establishing business credit before you actually need it makes it far more likely to get better terms. Okay. And this is the biggest this is one of the biggest probably complaints I hear about when it comes to lending. Hey, lenders never want to lend when you really need the money. Right. Because when you quote unquote really need the money, that means you're desperate. And lenders do not lend to desperate people because they don't want to throw good money after bad. And the bottom line is, if you're showing signs of maxing out credit cards and tons of inquiries because you're trying to look everywhere else, these are indicators to lenders and credit issuers that you're really in a bad place and they don't want to lend or issue credit to people in bad places. So you get it before you need it. That way, when these unexpected things happen, you have this revolving credit to rely on to be able to pull yourself out. It becomes extremely important to do. You also want to save personal credit for personal expenses. Using personal credit cards to pay business expenses, as we talked about, hurts your utilization, okay? And you need to make sure that utilization is as low as possible, especially under 30%. Look, this 30% number truly is a myth. What really happens with the FICO score is any utilization can adversely affect your score. You really want to keep balances below 1 or 2%, but over 30%, you are really doing more harm than good. So you've got to keep the utilization very, very low. Paying for business expenses with personal credit, again, makes that nearly impossible to do, as we've already talked about, which is a big problem. You also need to separate this personal credit from business credit. You got to create a barrier so personal assets can't be touched, even if the business goes into receivership. So look, the bottom line is that you don't want to guarantee everything in the business financially if you don't need to. There just makes no sense. The business goes down, you go down. You go late on a credit card that reports on your consumer credit report, it hurts your consumer credit. You personally guarantee an account that defaults, they go after your personal assets. There's no reason for that if you don't have to do it. And this is what business credit was designed for, and what NASDAQ, SBA, Inc., Entrepreneur, it's why they all talk so much about business credit, because of this importance of separating the two. So with an EIN, you've been told by the IRS that your business is legitimate. That's what business credit really starts with. You start with an EIN, and that's telling basically the IRS that you have a legitimate business. So no different than your social. Your social security number is the identifier in the United States to tell the IRS that you are actually a real individual. And an EIN number is how you tell the IRS in the United States that you actually have a real business. Okay. So then this way, they'll treat you and your business separate when it comes to tax liability, when it comes to many other things. So stop floating interest-free loans to the business using personal credit cards. Instead, pay yourself a salary like you would be paid even if you were an employee, and use business credit to cover those expenses. So many people make these mistakes. And then when your business grows, you start to run into dire consequences because your accountants and attorneys start to get involved, and bookkeepers, and they all see that you're doing this. It creates all kinds of issues. So by doing it the right way right from the beginning, you're setting yourself up on the right course for success. So trade credit is extremely helpful. You should use it. Use starter credit for supplies you already need. So trade credit is vendor credit. It's credit from places like Uline and Quill that will give you credit even when you have none. They report it to the business credit reporting agencies. It's credit from trade vendors. That's why they call it trade credit or vendor credit. So this kind of credit can help you get the supplies you need to get started. It helps. We've had clients buy printers, buy computers, buy all their office supplies, buy furniture from these places using credit to be able to do so while building the business credit and while getting the stuff they need for the business. Okay. Whether it be coffee or shipping boxes or furniture or office supplies or computers, they have all this. So true starter vendors report to at least one of the business credit reporting agencies, and they also offer terms like net 30. So a net 30 term, for example, means you have 30 days to pay the bill in its entirety, unlike a revolving account. Now, this isn't where you want to end up. You don't want net 30 accounts to be all of your business credit. This is just the first step. It's what gets you some money that you need to relieve some of these expenses, to give you more cash flow. And then it also helps you build business credit and get your business credit profile started in the beginning as well. So business credit means you can eventually get bank loans for the company. Okay, if a business opportunity is just too good to pass up, well, you may need to act quickly for that money. Okay, and we have this happen, even now. We have some opportunities to take advantage of things, and if we didn't have access to credit and financing and loans to do so, we wouldn't be able to. Okay, but you may not have that kind of cash on hand. So establishing business credit helps you be more lendable. Okay. And what that does is that helps you get bank loans. It helps you get credit lines. It helps you get more money. It helps you get it on better terms. It helps you get the money when you need it. Think of this. Think of trying to go in and get a mortgage or a personal loan or a personal credit card from your bank with no consumer credit score. You couldn't do it. It's the same thing in the business world. It becomes very difficult to get the money you need, even from hard money lenders, if you don't have business credit established, which is one of the reasons it becomes so important. So a business credit payment history matters. It affects a business credit score more profoundly than just about anything else. So you got to make sure you pay bills on time, in full if you can, and you'll have good business credit. Well, what's most important is that you pay your bills on time or early, period. That's what controls business credit scores. But if you pay them on in full and you don't carry balances, that can help you as well. Utilization affects about 10 to 15% of experience and telescore, their business credit score. So again, trying to make sure you keep balances low is important, but what's even more important is paying those bills on time. So establishing business credit early means you'll have that money many more times and opportunities to establish a good payment history. I see this happen all the time. People come and ask the question, what do I do? I have negative accounts on my business credit report. Well, the first thing I do is, pull your business credit and see if they're reporting and see how bad the damage is. The number one best all around way to prevent low credit scores is to make sure you have a lot of positive credit. If you have a lot of positive credit, then anything in regards to a negative item won't have as much of an impact. Think of this as your rating on Google. Okay, let's say your business has 5 stars on Google with 100 reviews. If somebody leaves a 1-star review, then you're still going to be like a 4.9 out of 5 stars. Okay, but if you have 2 reviews on Google and somebody leaves you a 1-star review, well, then that puts you at a 2 or 3-star because they're averaging all the reviews that you have. It's exactly the same thing here, okay? By having more positive accounts than negative, since your credit scores reflect the overall average of how you pay, the best way to make sure negative accounts don't have a grave impact on your score is to have more positive accounts that offset the negative. Okay, so get as many positive business credit accounts as you can. That will offset the rare case that you may go late on a reported account. Now, business credit's not built automatically. Just because you have an EIN doesn't mean you've got a credit profile and score. You have to actively work to build business credit. However, it can be done easily and quickly, much faster than you establish consumer credit scores, if you have all the details to do so. Now, again, if you're working with a company like us, what we say is we take years of business credit building and condense it to only months. We overcome every single pitfall that you're going to experience, and we know about them in advance and help you avoid them before you fall into them. If you're doing it on your own, it's still a process you can do. It just takes a lot longer, and you're going to run into a lot of unexpected things along the way. Either way, you just got to make sure you follow the right steps to be able to do this. And vendors become a very large part of that process. They become very important to help you start establishing business credit the right way. So don't try to do these steps out of order. You will be turned down repetitively. Okay, so the way that business credit works is a lot of people try to skip ahead. They say, I don't want vendors. I want to go to Staples. I don't want a Staples. I want a Visa card. But if you think about it, consumer credit doesn't allow you that ability either. When you start building consumer credit, a lot of people go through pretty much the set path. You get small limit credit cards, you get higher limit credit cards, you start to get car loans, then you get other kind of loans or mortgages, and you end up typically with the mortgage being the most elaborate type of credit you get. Same thing here. You can't walk in and go get a Visa card when you have no credit profile and score established. You got to establish this in the right order to get approved. You can't start with the top on the mortgage on the consumer side. You can't start at the top with a Visa card on the business credit side. You got to start with the bottom, build the profile they're looking for, so you have what helps you get approved. You have what these credit issuers are looking for, okay? And that's what we're really going to be diving into more, is the steps to take, okay? And do the order to actually take these steps. So step one, you got to set up the legitimacy. I talk about this all the time, okay? This is really your credibility. It's your legitimacy. It's how they look to see if you're reputable. Think of it like this. When you start building business credit, you have none. So they don't have a credit history to go off of, nor can they pull your personal credit. So all they have to go off of is your actual application, the information you put on there. What you put on there becomes extremely important to looking credible and being able to get approved. So you've got to be legitimate. You got to meet this criteria. You're never going to get approved. You got to have a professional website, a professional email address. You got to have a phone number that's for the business and a fax number, because some applications ask for it. You need to make sure the phone number is listed with 411.com, 411. Okay, you can't even go to 411.com. You can go to 411.com to find it, but you can't even go there to list it. They know that. That's why they require a 411 listing, to make sure that you're legitimate. You don't want to use a mobile phone or a home phone as the phone number on your application. Okay, you need to make sure that you have a bank account for your business. Now, they're not going to look at your bank statements, but they are going to ask for a bank reference to verify that you have an account. You want to make sure you have all the necessary licenses that you may need to be able to actually run the business as well. Okay, you've got to be a legitimate business if you need certain licenses. So these licenses need to be in the exact business name, exact business address, phone number. That congruency is important across everything. What's on your website should be the same as your licenses, should be the same as the Secretary of State. The information needs to be congruent everywhere that you're looking. You need to get established with the IRS. As we talked about, business credit's built under an EIN number. You got to get the EIN number. And you can only do that with irs.gov, going directly to the IRS to get it for free. You can use other services, but they'll charge you for it. So set up your business as a corporation or an LLC. Don't set it up as a sole proprietorship or a partnership. You can set it up as a sole proprietorship or a partnership, but the problem with those entities is that you are the business. You'll always be liable. So if you want to separate liability, you need to look at corporation or LLCs. Again, if you're starting as a sole proprietor, you at least need to get a DBA, because then your name is the business name. So DBA gives you some layer of separation because your name isn't the business name. But again, you still want to consider a corporation. You still want to consider an LLC to maximize your benefits, and again, to really come through and to be able to separate that liability. So if you do go with a DBA for the business, well, then at least your personal name isn't the business name. Okay. But again, you're still going to be liable for everything that happens in the business. And here's another crazy statistic. 1 in 7 get audited by the IRS as sole proprietor. Well, 1 in 50 corporations get audited. Look at that. That's insane. So what the IRS is saying is we really heavily scrutinize the taxes of sole proprietors, not so much for corporations. So avoid confusion, significantly lower the chances of an IRS audit, separate your liability. There's so many benefits by choosing an LLC or an actual corporation. Okay, so once you've done so, now you got to go to Dun & Bradstreet's website and look for your business. Can't find it? Then get a free DUNS number. So look, if they know you exist, they will populate a DUNS number for you. If they don't know you exist, then you've got to go and get that free DUNS number from Dun & Bradstreet. Now, DUNS number is how D&B gets the company into their system to generate a paydex score, which is the most popular credit score in the business world. No DUNS number, no record, no paydex score. So you've got to make sure that you take the step of getting the DUNS number. Now, you can go to creditsuite.com/DUNS, D-U-N-S, with no dashes to get that DUNS number, but you need to know Dun & Bradstreet's going to call you, sometimes multiple times. They'll email you. They're going to tell you everything I say here is incorrect. They're going to say you have to pay them thousands of dollars to build business credit. They're going to tell you have to pay for your DUNS number and pay for activating your credit profile and score. Here's my advice to you. Never get on the phone with Dun & Bradstreet. Dun & Bradstreet, when you talk to them, it's a division of their company called Dun & Bradstreet Credibility, and their entire purpose is to sell you credit monitoring for $2,000 that you do not need. So they will tell you all these crazy things to try to convince you that you need to buy something you don't need to buy. If you want to avoid being sold, don't get on the phone with them. Just a little bit of advice. Now, if you want to search Equifax and Experian systems as well to see if they know about you, then go to creditsuite.com/reports. You could do a free search with Experian, Equifax, and Dun & Bradstreet just to see what they actually know about you now. Now, if there is a record with them, well, check it for accuracy. You maybe want to pull your business credit reports to see what they actually have reported. But first, see if they even know you exist. Now, when you start to get credit from places which report to them, then they will have something to report on. But you got to keep in mind that Experian and Equifax will populate failing credit reports and failing scores. What does that mean? It means they will give you a score that literally depicts that you are on the verge of filing bankruptcy, even if they have no credit reporting on you. So you've got to start building credit, because once you get on Experian and Equifax's radar, whether you like it or not, they're going to populate business credit reports for you, and they will not help you. They will hurt you. So you've got to make sure that you are building business credit, especially before that happens, so you never have negative reports. Next, start getting business credit. These are these starter vendors that we talked about, the vendor credit, the trade credit. Those are how you start building business credit. Okay, again, as we talked about, they're often on net 30 terms: coffee, shipping boxes, office supplies, computers. Now, not every vendor can help you like true starter vendors can. True starter vendors, name I completely made up, has to do with people that will do two things. Well, they'll give you credit when you have none, and they report the credit to the business credit reporting agency. In my world, if trade vendors do not do those two things, they're not true starter credit, right? Because there's 97% of trade vendors will give you credit, but they don't report to the reporting agency. So that's not a true starter vendor, because they're not helping you start to build business credit. You got to get people that actually report. So you want vendors who will approve you, even if you're brand new in business, even if you don't have credit established, and you need to make sure that they're reporting to Dun & Bradstreet, Equifax, and or Experian. These are called payment experiences. And so what the goal to do here when building business credit is very simple. The goal is to get as many positive payment experiences as you can. So that means Amazon, that reports to Dun& Bradstreet, Equifax, and Experian, all three, are worth more value to you than Quill, that only reports to Dun& Bradstreet. The more payment experiences you have, the better. So the more accounts you have reported, the more accounts that report to all of the reporting agencies, 2 or 3 versus 1, the better you are, okay? So if you've ever seen our finance suite, our solution for building business credit, this is why we put front and center with every vendor and every credit source who they report to. Right away, you can scroll and see how many they report to, Dun & Bradstreet, Equifax, or Experian, or 2 or 3 of them, because it's easier. Remember, like I said, we specialize in taking years of this process and condensing it to months. That's one of the techniques, the tactics that we use to do so. By getting you more accounts, or getting you accounts that report to more reporting agencies than just one, it expedites your business credit building. So the more of these 3 they report to, the better it is for you. But the fact that they report to at least one is what makes them true starter vendors. Now, you're going to have about 5 of these kind of accounts to move to the next step. 8 is preferable. What's 5, 3, 8? What's the difference between these numbers? It's simple. The more of these you have, the more retailers will approve you. So for example, Staples may not approve you unless you have 10 accounts reporting on your business credit report, 10 payment experiences, okay? But Amazon may approve you if you only have 5 payment experiences. So even though I say you can start to get retail credit with 5 payment experiences, the reality is the more payment experiences you have, the more retailers open up. Now, again, when you're doing this on your own, this is one of the struggles. You don't know if Amazon or Dell or Apple need 5, 6, 7, or 8. So the only way you know is to apply and get approved or denied, okay? And if you ever look at and see how important this is, you'll see why, for example, our finance suite, which is kind of our system to build business credit, tells these things. It says, like, look, here's how many accounts this company actually needs to approve you, because it's super simple. You're like, I have 6 accounts reporting. Who will approve me? Well, Dell will approve me. Boom, boom, you're done. So then Apple needs 8. Well, you don't even bother applying to Apple till you need 8. And those are just examples, although Dell and Apple don't actually need 6 and 8. So that kind of gives you an idea of how this works. You got to get more payment experiences. The more payment experiences you get, the more retail credit becomes available. Now, you might have to apply for more than once to get approved. So places like Uline and Quill may make you place 2 to 3 orders before they finally approve you. In those cases, you don't not order. You continue to order what you were going to order and pay cash for it, pay money, use your credit card, use whatever you needed to use. Then go back and try again. By the second or third order, they will approve you. And again, you have to be patient when building business credit, because if you're doing this on your own, you don't know which of these sources has these requirements and which doesn't. You just have to expect that some vendors like Uline and Quill will have that requirement. They may make you place 2 or 3 orders if you have no other established business credit, you're newer in business. And you may need to buy some things you don't necessarily need, or buy things from places you wouldn't necessarily buy them from. Quill is not usually where you probably buy office supplies. You probably buy from Amazon, or you buy from Office Depot or Staples. So you might be using Quill just for the purpose of building business credit. But my suggestion is show some loyalty. Okay, Quill was one of our first accounts at Credit Suite, so we still use Quill today. We've got tons of credit limit with Amazon and Office Depot and Staples, but we try to use Quill as much as we can because we don't mind paying it all off in full every month, and because Quill gave us a shot when nobody else does. And I believe that kind of loyalty is important in life in general, especially in business. And you may need to buy some things you don't necessarily need. You may need to go to Gimpler or Granger's and buy batteries and first aid kits and things you wouldn't normally buy. But again, it's a small sacrifice for the huge benefit of building business credit, which is what you're really accomplishing. So some of our favorite true starter vendors are Quill, office supplies; Granger, industrial supply; Uline, shipping supplies. Okay, so these are 3 that I've mentioned, as well as Gimpler's, kind of back and forth. They reported to Dun & Bradstreet, then they stopped, now they're back. So again, I like these because mostly going to have stuff that anybody could use. There's stuff that they're going to have that you're going to want to buy. Now, even starter vendors, sometimes they're going to want that DUNS number. So make sure you follow the order of steps I've given you to meet the requirements to get approved. Some of them are going to want trade references and bank references, right? That's why I already told you to get a bank account, because you're going to have those things that they're going to need to be able to move forward and get approved. You may, again, as we talked about, need to try a few times to apply to actually get approved. So vendors which do not report sometimes aren't a waste of time. Okay, because what happens is you can use them as trade references. So a lot of these applications ask you for trade references, and that's where companies that don't report become valuable. Okay, so again, getting credit with credit issuers that don't report can still help you. It's just you're using them as trade references to get approved for other kinds of credit instead of actually just using them as payment experiences to build your business credit. So you got to know what's happening here. You got to make sure that what you're getting credit-wise is being reported. You got to address all errors or negatives on the credit report as soon as possible. You got to get in the habit of checking your business credit reports. You got to start digging into the details, not just the scores. Look, business credit quality is the lifeblood of your business. So you need to regularly keep up on your personal and your business credit. Okay. I have credit monitoring with every reporting agency, consumer and business, because I need to know what's going on. I get alerts when things change to prompt me to look to know what's going on. It becomes very important. Okay. Now we can help you with that. If you go to creditsuite.com/monitoring, here you see creditsuite.com/business-credit monitoring. You could just go to creditsuite.com/monitoring. We work directly with NAV, and our NAV integration gives you access to Experian and Dun & Bradstreet data for only $24. Now you can go to D&B.com/credit-builder. You can get the credit monitoring directly from them if you'd like to. It's about $149 or $159 a month. They just changed the pricing on it. Equifax is about $20 a month. You can go to equifax.com/business and you can access business credit monitoring. And Experian is about $50 a month. They'll give you a bunch of options that are cheaper, that are, a couple options that only get you scores, but you need to see the profiles. So go to smartbusinessreports.com and access those. Okay. And Experian is about $50 for the actual reports that you're going to want to have the scores. So update the information. If there's errors or inaccurate information, update it with the reporting agencies. Okay. You can go to iUpdate. The iUpdate is Dun & Bradstreet's service that you can use to update your Dun & Bradstreet credit profile. You can also get Equifax or Experian's credit monitoring, and you could dispute any derogatory items through their credit monitoring on their websites that you go once you actually have access to log into credit monitoring. And once you've done these things with 5 to 8 vendor accounts, then you can move on to revolving store credit. Now, these will be companies like Staples, Office Depot. These are companies like Apple and Tractor Supply, and there are companies like Costco and Sears and Best Buy, stores, retailers, Amazon. This is when you can start to get credit with these companies. Again, use the company EIN on the applications, leave the social off. If they tell you it's law, they have to have the social. Again, as we talked about, make sure that you're disclosing that they don't have the authority to attach a personal guarantee or a personal credit check, just to keep yourself safe. Okay, Amazon can be helpful. They report to all 3 reporting agencies, as we talked about. They will look at the business legitimacy that we talked about, and to get out of providing a personal guarantee, you should show at least 3 years time in business or have established business credit. You don't need to be 3 years time in business. But again, what we find is that if you're in business less than 3 years, the more accounts you have reporting on your business credit reports, the better you are. The next step is fleet credit. When you have about 8 to 10 accounts reporting, then you can move on to Conoco and BP and Chevron and Sunoco. You get gas, you get fuel, you get repairs, you maintain vehicles. So if you're a trucker, which a lot of truckers build business credit because it's like $600,000 to fill up the gas tank of a truck, of a big rig truck. Well, you could use business credit to be able to do that. You could use business credit to be able to buy the fuel, maintain the vehicles, et cetera, et cetera. Okay. And again, you want to follow the same rules applying using your business EIN. And then the next step is cash credit. Okay. This is when you have the responsibility, the history that shows that you've been building business credit successfully. And these are companies like Visa Card and MasterCard and American Express that you can get without the personal guarantee, without the personal credit check. Now, you're going to need about 14 accounts reporting to get to this step. And again, some of them will have time and business requirements. Some of them won't. So does time in business and revenue really matter? Yeah, it does. No matter what kind of business credit or business loans or credit lines you get, those things do factor in. But here's the saving grace of business credit. The primary factor that matters most more than anything is payment experiences. How many accounts do you have reporting on your business credit reports? So when you see applications that say 3 years time in business, like Office Depot and Staples do, that are both underwritten by Citi, don't like throw your hands up in the air and go, oh man, I don't have 3 years in business. The truth is, if you apply and you still have 10 accounts reporting, you're probably going to get approved for those, even if you've been in business 1 year. Okay. They're telling you 3 years in business. They're telling you $1 million in revenue is the requirement because they basically don't want unestablished businesses applying. But if you've done what we've talked about, you've set up your credibility, you have your DUNS number, you've done the steps, and you've built the prior business credit that needs to be built, you will get approved for this credit without the personal guarantee or without the personal credit check, okay? We see clients do it all the time. We've actually done it with businesses that we test ourselves, and we do that very often, okay? We have our own test businesses that we test all this stuff out on. So then that way, if somebody comes in and goes, hey, man, Gimplers doesn't report to D&B, we don't have to just rely on what Gimplers underwriters tell us. We could do it ourselves and make sure that it actually reports. And what we find is that payment experiences matter most. But yeah, time in business and revenue may come into play, especially if you don't have the payment experiences you need to start getting approved, okay? And of course, they have minimum credit score requirements. Good news there is, since credit scores are based on how you pay, all you have to do to get good scores is pay the bills as agreed. So unsecured business financing, this is another hack that may help you. So with unsecured business financing, or something we call UBF, you only pay on what you owe. It's revolving credit. It's not like a loan. So these are basically credit lines. But unlike credit lines typically that don't have 0% intro rates, these have 0% interest rates. So they have 0% intro rates for 6 to 18 months. They work for startups. They work for high industry, risk industries like real estate investors. So it's a great solution because what happens is they'll give you credit when you have none, and they report it to the business credit reporting agencies, even as a startup. You're starting with Visa credit. You're starting with MasterCard credit. You're starting with American Express. How do you do it? You're using your personal credit to do it. You're providing a personal guarantee with this option. You're providing a personal credit check for this option. Now, don't get me wrong. I just told you about vendor credit where you don't need the guarantee. You don't need the credit check. But let's say you or a guarantor have good credit. Well, this is kind of a shortcut, okay? Because you don't need cash flow. You don't need collateral. You don't need financials. It's no-doc financing. You don't need to fulfill a time in business. Even startups can be able to qualify, okay? So what happens is with this, a finance source works on your behalf to actually get these credit card / lines for you. What do I mean credit card / lines? Well, it's a hybrid. They have the benefit of both. You have the benefit of 0% interest rates for 6 to 18 months that you get with credit cards. You get the benefit of taking physical cash out on that you get with credit lines without paying 20%. You get the best of both worlds. 0% and the ability to take cash out, and they report to the business credit reporting agencies. Now, most of the time, their tactics to get you credit result in much more than you could get by yourself. And that's because they're applying for multiple cards at the same time. So the inquiries won't affect your ability to get approved. So what happens is the finance source typically gets you 5 times more credit than you'd ever get on your own. They're getting you credit with 0% rates for 6 to 18 months. They're helping you get the credit and work through the system to take the cash out without paying the 20% interest rate that you typically have to pay. They're getting you credit with basically credit card companies that report the credit to the business credit reporting agencies. So not only can you get $50,000 up to $150,000 with this program, you're building your business credit at the same time. You got 5 to 8 high limit accounts reporting on your business credit reports. Okay. So again, it has all the benefits of any kind of money money you'd want as a startup, or maybe you're already well established. 0% interest and credit that helps you build your business credit is only going to be a benefit. Okay. And they also get you the most cards for points and the lowest APRs and rates, et cetera, et cetera, et cetera, basically getting you the best credit with the most amount of benefits. So with UBF, again, you don't need security, you don't need assets, you don't need collateral. It's completely unsecured. Okay. They don't look at cash flow financials. With a 650 score, you can get cards that report to the personal reporting agencies. And with a 680, you get the business cards. So again, how does this work? You got a finance source. The finance source goes out and gets you 5 to 8 credit cards / lines that have 0% interest for 6 to 18 months that report to the business credit reporting agencies if you have the 680 score that help you build your business credit. Now, you have a choice. They'll offer you business and personal cards, and you can get twice as much money if you want to go that way, or just get the business cards where you get less money, but they all report to the business reporting agencies. Either way, you're able to get to 150 grand as a startup business if you're willing to provide a personal guarantee and a personal credit check, and you're building your business credit at exactly the same time. So it's like multiple benefits here. Now, again, you can't have bankruptcies, and you if you did, you might be able to get personal cards if it was older. You can't be in credit counseling. You can't have judgments or tax liens on the credit report. So you need to have no derogatory items, no outstanding collections, no late pays in the last 12 months, no foreclosures or late pays on mortgages. You got to have some kind of revolving credit now, like at least one credit card with a 3-year history, a $3,000 limit or higher, or you need to have a car loan or mortgage history. Remember, this option is based on consumer credit quality, right? So it's based on your consumer credit quality, unlike vendor credit that is not based on consumer credit quality, okay? You can use a guarantor or credit partner to basically up the numbers, to get more money or to get it when you can't qualify. Often these people, maybe you can exchange a piece of equity in the business, or you could pay them interest, or there's a bunch of different ways that they may want paid back. They may just be a friend or family member that wants to help you out. So again, think of that from the creditor's perspective. They want to know you'll pay them back. That's what it comes down to. So what we've talked about, look, this program isn't for everybody. And I have people that come into this and don't like the way this program is laid out. And so then they get mad at us. We didn't invent this program. We don't even do this program. We have the best sources in the industry that actually do it, that specialize in it. What we do as a company is we specialize in the no personal guarantee, no personal credit check, corporate credit. That's what we do. But we have a lot of other companies we work with that offer this kind of product where they can help you build business credit, but you've got to provide the personal guarantee. You've got to provide the personal credit check to get approved. It might not be for you. They're going to charge you 9, 10, 12% on the money they do get you. They're applying for multiple credit cards on your behalf. They're going to need a power of attorney to do so, for example. So again, this is not a conventional funding method, but I will tell you, it's the most successful method we've ever seen for newer businesses. We've never seen newer businesses get so much money as what they can get through this program, if you don't mind the fee and the way that it's a little bit of an unconventional way to do it. But the businesses that are doing it are still set up with the reporting agencies to do soft pull credit reports. And they're very, very, very legitimate, very, very, very successful businesses in a lot of cases. And some of them not out there, not so much, which is why we always try to keep an eye on who is the best. 9 to 12% fee on what you secure. Okay, you're going to pay an average of about 10% fee. Is that high? Okay, well, it depends on what you consider to be high. Most revenue lending, a lot of that is 35 to 65% interest rate payback. SBA loans are about 7 to 10% interest. So with this, you're paying a 10% fee. With SBA, you pay about 5 to 6% when you look at the bank and what you pay SBA. And this has 0% interest for 6 to 18 months. So again, this might not be for you, might be, but it's a shortcut that it may actually work for you. Okay. So remember, again, with SBA, you're still going to pay 5, 6% points on even that. So, 5 to 10 points in the lending world is not uncommon when it comes to business credit. And just like with SBA loans, you can roll the fee right into the card you actually get. You never pay anything up front. And just, if this is something you're interested in, you can get in touch with us at creditsuite.com and we'll talk to you, find out some information, and tell you the best sources to go through. We'll even help you through the process. We never charge you a dime for that. We don't charge you any money to ever get funding. The reason for that is because some of the lenders give us a referral fee just for actually referring you over there. So that's how we get paid. We never roll money into the front or back end of anything, and we only work with lenders that only charge you and roll the fees into the money you get. We do not work with lenders or credit issuers or finance sources that charge you up front. So balance, limit ratios on existing revolving accounts, okay? The lower the ratio, the higher the approval amount will be. So what this comes down to is, what is your utilization? The lower your utilization with this program, the more money you get. 30% is required, the lower the better. Okay, it looks at overall percentage and percentage of utilization. The balance is in relation to your limits on individual credit cards and overall. And credit inquiries are a big factor here, okay? You need to have less than 6. Even 1 or 2 can cost you 10 or 20,000. Remember, we talked about this earlier. I told you, look, you got to stop putting inquiries on your consumer credit report when it's not needed. You've got to stop putting credit cards that report to the consumer credit reporting agencies, maxing those out because they hurt your score. This is one of these programs where it affects your ability. Inquiries can get you denied. High of utilization can get you denied. That's why you want to keep those things intact to be able to qualify for these kind of programs. So let's recap. Business credit means personal credit's untouched. It's separate credit profile from your personal credit. You got to keep your utilization low on your consumer credit cards. This helps you do it because you're getting accounts that report to the business credit reporting agencies, not the consumer credit reporting agencies. So you can max out the credit card, and it only reports on your business credit reports, doesn't affect your personal FICO utilization, doesn't affect your consumer credit score. And since most of your business credit scores are based on payment history anyways, it doesn't really adversely affect your business credit scores either. You don't get inquiries on your personal credit report. Remember, that's important. Programs like unsecured business financing, UBF, like we just talked about, you could disqualify or qualify for $10,000 or $25,000 less because of inquiries. That's only one example. I can give you many more examples where inquiries ruin or lower your ability to get financing and credit. Establishing business credit before you need it, well, makes a bunch of sense. Because look, the problem with most businesses that fail, the statistics show that the business owner makes mistakes, and then the business doesn't have capital to recover from the mistakes, and the business goes under. So what we found, and all the studies support this, is that when you have access to money, you can make mistakes and bail yourself out with the money that you have and still be a thriving and surviving business. The people that don't have access to the money lose. So bottom line is, success and failure is determined based on businesses that get access to money before they need it versus ones that don't have it when they do. Payment history and credit history matter a lot, so you need to make sure that you're paying those business credit accounts on time. Establish business credit the right way. It's got to be in the right order, the right series of steps. We talked about vendor credit. We talked about moving to revolving store credit. We talked about moving to fleet credit, to cash credit. We also talked about monitoring this along the way, so you see how many accounts you have reporting. Set up and bolster the business legitimacy. Look, I can't tell you how important it is. It is insane. 89% of conventional bank applications are denied. What does that mean? Means that almost 90%, 9 out of 10 people that walk into a bank with a stack of paperwork that think they meet the requirements to get an SBA loan get denied the SBA loan. Here's what's shocking. Majority of those are because of simple things that had to do with legitimacy that the business owner doesn't know about. I'll tell you exactly how it goes down. The bank goes right in to a couple different databases, including getting data from places like LexisNexis, the Small Business Financial Exchange. Ever heard of it? You should know about it. It's very important. The Small Business Financial Exchange is where all this data is fed into, that lenders pull data out of to verify that what you have on the application is what they already have from these other sources like LexisNexis. Okay, so what happens is if you don't meet this criteria, that's what gets you denied. It's so crazy. So what I'm saying is that you added the word Inc. on the top on your name on your business application at the bank, and when they pull LexisNexis, when they go into Small Business Financial Exchange, they don't see Inc. in your name. They can't verify that the business you're applying for is the same one they found, and you get denied because you're business name doesn't match up. So your business address, the phone number, the emails, it's all got to match up. If it doesn't match up to what's in Small Business Financial Exchange, to what they're getting from LexisNexis, then what happens is you get denied. This is why the majority of bank applications are denied. You could have had the credit, you could have had the revenue, you could have had the collateral, you could have exactly what you need to get approved and not get denied because you failed the legitimacy check. The simplest thing to do. This is where the majority of these 90% of business applications that are denied are failing. You got to get that DUNS number. You got to get the EIN number. Okay. You got to set up the business entity the right way to be established with the IRS. These are all basics business principles that they're going to want to see. You got to start with vendor credit. Then you move on to revolving credit, move on to fleet credit, move on to cash credit from there. Okay. So you got to follow that set order. And don't forget, use unsecured business credit. If you do have good consumer credit, hey, why not? Get 50 to 150,000 in real usable credit card / lines where you get 0% financing and take all the cash out and build your business credit at the same time. It's a great way to go. But again, I'm going to tell you up front, just because some people get mean and they say mean things on YouTube because they find out that they had to pay a 9% fee or that they're giving the company a power of attorney to get credit cards on their behalf. That's how that program works, okay? So understand it's unconventional, but you know what else is unconventional? A startup getting $150,000, okay? So it's a creative way that a lot of financial authorities have found to be able to get startups, people with credit only as a strength that don't have revenue, that don't have collateral, or people that want to get more money and get revolving credit with 0% limits to be able to do so. So again, that kind of method is really cool if it's something that you don't mind being unconventional, taking the unconventional path. If you do, then just go with the standard way of building business credit, using the vendor, using the revolving, moving to fleet, moving to cash credit, and be successful doing it that way. So if you have questions along the way, give us a ring, 877-600-2487. That's 877-600-2487, info@creditsuite.com. Don't forget, we've got a great free guide that maps out more in depth the steps of building business credit, even provides other vendors that we didn't talk about or I didn't show you on the slides at creditsuite.com/EIN. And we'll send you regular information too about getting financing and getting business credit. Also, don't forget, if we can help you with getting financing, give us a ring. Send us an email. We work with over 1,000 lenders in every legitimate funding program, and we never charge you a dime to help you through the entire process of getting a loan. Plus, we help you get all the money you can get now. We develop a finance blueprint to graduate you to even more funding stages like term loans and SBA loans as well. And don't forget, if you want the shortest path to build business credit, get in touch with us. We literally takes what takes people 2.5 years on average, and we get it done in less than 6 months because we know all the aspects of this. We know what the underwriters require. We know the sources to apply for in the right order, all the hiccups you'll run into along the way. But you also can go out and do this on your own. We've got tons of free training right here at the top right of our website. CreditSuite.com, if you access our YouTube, you'll see hundreds of videos we have. Facebook, Instagram, Twitter, we are doing regular tips and updates every single day. Places like Facebook, we go live almost every week where it's a Q&A. You can ask me questions in real time and we're talking and I'm helping you in real time through the process. So don't forget, creditsuite.com creditsuite.com, top right of the page to access our social media links. Have any other questions? Give us a ring, 877-600-2487. If you missed this, then go back. If you're just coming in after we've already went live, go back and watch it in its entirety. We covered a bunch of awesome info. And don't forget, you can listen to us on iTunes, on the fly, or Stitcher or iHeartRadio. And you can also go and subscribe on YouTube and get notified when we go live. We go live every every Tuesday at 1 o'clock Eastern on YouTube as well. Thanks, everybody. Have a great day.